Cartesi is one of the most technical cryptocurrencies you could think of. It's shooting up out of the blue, 40% just today. What's behind this rally? Who's the buyer? Who's the seller? Let's have a look at the dynamics and let's look at data that most people are not looking at. This is the rally I'm talking about. We are a bit over 25 cents. And here's the website, application-specific rollups with a Linux runtime. Now, I'm not going to bother you with all of that marketing jazz. We are going to look at the relevant data. What's the tokenomics and who's buying and selling here? Now, is this just a pump and dump, some manipulation by centralized exchanges? To figure out if there's something fundamental behind a project, it's always interesting to see the developer activity, to see if programmers right now are committing code changes, if something is happening in the product development department. And here's a nice thing about crypto. A lot of projects publish their code online open source. And over here we've got GitHub, and we can see that there had been an update just 54 minutes ago, another update here 2 days ago, another one 2 days ago. Lots of updates just 2 days ago. So we can already be certain that this is not a dead project, at least, right? That something is happening. Now, I try to be as objective as possible on this channel. So we're going to look at the bad things as well. For example, this chart here behind me. What we've got here is the number of circulating Ctsi tokens over time. And this is not pretty whatsoever. Because again, price is a result of demand versus supply. And as supply is expanding, the price tends to go down if demand doesn't grow at the same rate. Now, in the last 12 months, the supply increased by 18%. But luckily, we also have the data going forward. This is token.unlocks.app. And it shows us that we are currently at 884 million CTSI tokens. And that 1 year from now, the number will be 954 million. So supply isn't going to grow that much. For cryptocurrency of that size, that's definitely manageable. Now, Cartesi also has a staking program, so it can offset some of that inflation via staking. Let's have a look at the numbers. This is explorer.cartesi.io/stake. And we've got different staking pools, and we've got the annualized staking reward. It fluctuates somewhat, but you can achieve at least 9%, it goes all the way up to 19%. The reality is probably somewhere in the middle. Now here's some data that you've definitely never seen before, because I've developed this tool myself. I make this available to the premium members. It's thebitcoinstrader.com, link is down below. And this tool shows the number of wallets based on the holding size. So we can here segregate between the regular retail investors versus the whales. On the left side, we've got the number of wallets that hold at least 1,000 Cartesi tokens. So at the current price, that's $258. For the middle chart, we go one order of magnitude up. So that's now 2.5K. On the right side, we've got the whales. That's 25K. So each of those charts has a 10x from one another in the minimum holding threshold. Now, isn't it interesting that the whales tend to accumulate? They are now at an all-time high, whereas medium and small time holders are pretty far away from the all-time high. Now, this is a very, very long-term chart, right? Each of those data points is a different day, and it starts in April of 2020. Let's just look at the last 30 days. So let's look at the holder development while the price went like this. That's this chart over here. All wallet cohorts accumulated in the last hour, but especially the whales did. The number of whales went up by 10% roughly. The number of smaller holders went up maybe by 2% or so. So everyone is buying, smart money is buying even more. Now here's something that's potentially concerning. The 24-hour trading volume of Cartesi was larger than the market cap. So in the last 24 hours, each Cartesi token has moved hands more than once. This could potentially be manipulation. This could potentially be even wash trading. And this becomes especially concerning once we look at the perpetuals market. 2.7 billion worth of trading volume on Biofin, 650 million on Binance. So there is a ton of bets on the price, a ton of leverage, where then in the end, the centralized exchanges might have to hedge themselves. So smart money is buying despite the potential manipulation. Why is that happening? Your guess is as good as mine. If it's your first time here, feel free to subscribe. I publish videos regularly. A like would be very much appreciated as well. It helps the channel grow. There's also a free Telegram. Link is down below.